Ladies and gentlemen, today we're diving into a topic that has NIO investors watching the calendar more closely than ever. In just a short while, NIO is set to publish its third quarter earnings report, and this announcement has become one of the most anticipated financial events for the company all year. There's a lot riding on these numbers, not only the raw results, but especially the guidance that NIO plans to give for the months ahead. What happens on that day could mark a major turning point for the company and possibly the stock. So let's break down what matters most and what everyone is hoping to see. This is not financial advice. Please do your own research. NIO has officially confirmed that on November 25th, a few hours before the U.S. markets begin trading, they will release their Q3 earnings report. This is shaping up to be an extremely important moment because investors are eager to see whether NIO will address the one question that has been hanging over the company for months. Will NIO confirm that they expect to reach profitability in Q4? That single-point profitability guidance is what most long-term holders care about the most. While the entire earnings report is important, the guidance could be the real centerpiece. Investors want to know if NIO's management will stand by earlier comments that the company is aiming to break even or turn a profit in the fourth quarter. If NIO confirms this path, it could signal that the company is finally moving past the heavy losses that have been weighing on the stock. Looking back at Q3's performance, we already know that NIO delivered 87,071 vehicles, which marked a 14.77% year-over-year increase. This was a strong showing and a sign that demand has remained solid, even in a highly competitive market. The quarter was also notable because NIO's new sub-brand, ONVO, achieved a milestone by delivering 30,653 vehicles, which actually exceeded deliveries from the main NIO brand for the first time. That shift alone demonstrates how quickly ONVO is scaling and how it could play a large role in NIO's growth strategy moving forward. Meanwhile, Firefly, another brand under NIO, delivered 12,847 units during the same quarter. Previously, NIO projected that its Q3 revenues would come in between 21.81 billion RMB and 22.88 billion RMB, which roughly translates to around $3 billion. Investors are now waiting to see whether NIO managed to meet or surpass those expectations. Another number that will be closely watched is NIO's gross margin. For NIO to realistically approach profitability, gross margins must continue to climb. Any improvement here would reinforce the idea that NIO's cost optimization efforts are paying off. The next major point investors want clarity on is cash on hand. A higher cash position helps protect the company from liquidity challenges and allows it to execute expansion plans without raising immediate capital. If NIO reports growth in available cash, it would boost confidence and give shareholders reassurance that the business is operating from a position of strength. November 25th falls on a Tuesday, and once the market opens that morning, the outcome of NIO's report could have an immediate impact. Not only the numbers themselves, but the tone of management's commentary will set the stage for what happens next. Many investors expect a strong quarter, solid guidance, and confirmation that profitability is within reach. If that happens, it's possible the stock could rally sharply, maybe even leading to a short squeeze type move if sentiment flips strongly enough. NIO has already shown meaningful progress in deliveries, revenues, and operational execution. Everything they have demonstrated in Q3 suggests that they are inching closer to the turning point that investors have been waiting for. And truthfully, one of the main concerns among both institutions and retail investors has been the steep net losses reported earlier in the year. Q1 and Q2 both recorded losses near $1 billion, a number that left many observers uneasy. To move toward profitability, NIO needs to narrow that loss dramatically. Several analysts have already suggested that NIO's Q3 net loss might shrink significantly, perhaps down to around 500K to 600K RMB, which would be a meaningful improvement compared to the huge losses of the previous quarters. If these predictions turn out to be accurate, it would be a major step for NIO. A lot of viewers have been asking whether these earnings are truly confirmed, and yes, NIO has officially posted the date on its website. The report is less than 2 weeks away, which means we're very close to seeing the actual numbers. Now, while the 87K plus deliveries from Q3 were impressive, the focus for NIO investors has already shifted to Q4. Many are looking ahead to see whether NIO can push deliveries toward the 150K mark by the end of this quarter, and whether revenues will expand dramatically, maybe even hitting $5 to $6 billion if everything aligns well. These are ambitious expectations, but investors are hoping for a standout quarter. In addition to vehicle sales, another segment worth watching is NIO's other revenue streams. In Q2, NIO recorded an all-time high in other sales, reaching over 400 million RMB. Part of this spike came from NIO's partnership with McLaren, where NIO supplied certain software and received a multi-million payment in return. This partnership boosted NIO's non-EV revenue for the quarter, and investors want to see whether Q3 continues that strength. Tracking these additional revenue categories will give a clearer picture of how diversified NIO is becoming. As for the stock itself, anything could happen leading up to the earnings release. There might be volatility, or the stock might simply move sideways. No one can truly predict short-term action. But what is certain is that once the earnings are released on the morning of the 25th, NIO shares are almost guaranteed to react sharply, whether upward or downward. Naturally, every NIO bull is hoping the reaction is positive. Many would love to see a surge into double-digit territory, especially if the results and guidance exceed expectations. The truth is that NIO's stock has already shown strength over the past few months. Since the rally that began in late July, the share price has climbed from about $3 to over $6, where it's currently trading. Despite the stock not yet delivering the breakout investors want, the upcoming earnings announcement could serve as the spark that reignites momentum. For now, the best move is simply to wait. The data will speak for itself. If NIO delivers a strong report with encouraging guidance, especially around profitability, it could reshape market sentiment in a big way. To wrap things up, NIO's upcoming Q3 earnings release on November 25th is shaping up to be one of the most important updates the company has given all year. Investors will be paying close attention to guidance for Q4 profitability, gross margin improvements, cash reserves, and progress in net losses. Delivery performance was strong, ONVO surpassed expectations, and additional revenue streams could add extra upside. The stock might see major movement immediately after the results, and many are hoping this becomes the catalyst that pushes NIO back toward double-digit prices. Now, all that's left is to wait and see how the numbers unfold. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.